Hello, everyone, and welcome to another edition of Bleeding Crypto's Market Update. Today is Monday, May 22nd, and it's been about a week or so since I've done my last update. So I figured now would be a good time to kind of take a look at, we're going to take a look at several time frames. We're going to start off with the macro view, then we're going to go into the smaller time frames, the hourly time frames, the 4-hour time frames. So we can look at some local moves. We're going to cover the heat maps, both spot and liquidation heat maps as well, to give us an overall picture and try to build a story, a narrative around the direction of where I think Bitcoin is heading, where it's going, where we are now. And keep in mind, guys, I am not a financial advisor. This is all game theory. Do not take anything I say as a financial advice. So with that out of the way, let's go ahead and get started. I want to start off by the daily time frame. Just for now, I should start off on the weekly, but for right now, I just want to start on the daily because a lot of people are focused on the daily time frame and they're really bullish off the daily. And I don't see much to be bullish about. I'll tell you the points that I see that are, I wouldn't say bullish, but they're okay. They're not as bad. But for now, what I look at when I see the daily time frame, so I see the price action, I see consolidation. And I look at the MACD and I look at the momentum, the volume oscillator, and you can see it's printing higher lows. So it's printing a higher low after higher low. Here it kind of stalled, but nevertheless it's still a higher low against this. It's very slightly, but if you zoom in, you can really see just a hair. And then we have another one, and then we have the last one here, another higher low. Now keep in mind that we are still below the cross signal. So even though we are creeping up here, we still have to cross that cross signal. And what is going on here, we could be in one of these situations where we were printing higher lows all the way up here. When we got to the cross indicator, we rejected. We tried it again and we rejected hard. So here we haven't quite gotten up to the cross indicator, but we're getting very close. So the momentum is slightly going up while the price action is consolidating, So that it would be I would call it a bull divergence because you have the momentum on the oscillator moving up while you're going sideways. So it's building a pressure to the upside. So there is a slight, it's not a drastic one, but there is nevertheless something to be slightly bullish on. Now, why do I say slightly? Well, because as you know, I am an EMA trader. EMAs to me speak volumes and they tell me a bigger story. So the EMAs here, from when we crossed the 9 EMA, cross bear on the 30 and bear on the 50, you can see that we have not been able to reclaim a candle body close above the 9 EMA. It continues to just push the price lower and lower. Even as we've failed few times, 4 times already, to break above it and stay above it. So that to me speaks volumes as far as the true weakness that the market has. Now, on top of that, we have the 30 EMA that is going to be, it's sitting right above the 50 EMA. Now, these are not leading indicators, they're lagging indicators. So what will happen is if we get another dump, we now have a cross between the 30 and the 50. That adds another layer of resistance to the price action trying to move to the upside, and it just adds another layer of bearishness to the overall structure. Now, looking at where we are here, we are now consolidating. You could say that we're still above, depending on where you draw these lines, and these are obviously subjective. But if we look up and we just utilize candle bodies, okay, just candle bodies, and we're going to use, and I'm going to actually look, there's a couple of candle body areas here. So I'm going to use this candle body area here, and I will explain what I mean. So we've got these candle bodies here. So we got this candle body close here. We've got this candle bodies close here and here and here. Now remember, guys, when we're looking for resistance, we always want to look for prior support. That's where we find our true resistance. So now when we look at, if you want to go a little bit lower, just to give the bulls a little bit of leeway, we can even go down a little bit lower to these candle bodies. Now there's not much candle bodies other than this here for support, but we've got some nice wick that caught the price action here on this tweezer bottom, and that did actually eventually lead up to a bigger price action. So we have 2 areas here of resistance that we could easily use. look at where we're consolidating, guys. Come on, you have to be honest and not allow your bias to get the best of you. We are consolidating below two areas of prior support that is now resistance. I mean, yes, you could draw the line, let's use this bottom wick to fit our narrative. Yeah, you can. If you want to do that, I mean, like, again, these lines are very subjective. So you can put them wherever you want. But if you want to do a non-biased analysis and actually take a look at some areas that carry a lot more weight than just using some random wicks to the bottom to fit your narrative, you can do that. You're more than welcome to do so. So looking at these two and explaining why I chose these two, you can see the consolidation going on below resistance. So that is not good, as we are not experiencing any high volume coming in. If you look at the volume here, the volume is tapering off. Though the momentum, like I showed you in the beginning, on the MACD on the daily, we do have higher lows forming, but it is not. It's slight. So that's why I said there's a little bit of bullishness to you can make a case for that. But I feel like their overall market structure is giving more of a bearish outlook. Now, to add to that bearishness, and again, guys, the bearishness is not, I'm not calling a major drop. All I'm trying to do is maintain the integrity of the uptrend, because we are still in an uptrend. Even with this bearishness here and this consolidating below resistance, it fits a bigger picture, which is why I said, I guess I should have started off on the weekly, but I wanted to start off on the daily just to give you some context of what I'm looking at as far as how bearish or bullish are we. So in my opinion, let me go ahead and just hide these EMAs for now. I'm going to hide the indicators for now, and we'll just look at strictly price action. We're going to keep those two bars of resistance, prior support, new resistance on our chart. So for now, are we in a bear market? Yes, we are. Until we create another higher high, we are still underneath the prior high. So we are still trying to form a lower high or prove to the market that we are now in a bull run and break above the prior swing high, well, prior high, better said, not even swing high, higher, and make a higher high. So for now, we are in an uptrend. So until proven otherwise, just like here, when we were looking at all of this price action, were we in a downtrend? Look at here real quick. Let's just take a couple minutes just to look at this here. We were in a downtrend until proven otherwise. Here, all of these, everybody's getting bullish here and saying, "Oh no, we're going to new bull run." Every single one of these pumps, and we were still in a downtrend until when? Until we proved it. What proved it? What reversed the downtrend? This candle right here, and I've mentioned this many times before. So now we put in a structure, a trending up structure, meaning we have a low, we have a high, we have a higher low, higher high, and when I mention about the integrity of the upward trend, I'm looking for a higher low inside of this area. Now, why don't we consider this little drop here as a higher low? We could consider this as a higher low. However, the reason I don't is because when you're looking at technicals, guys, and you can back test this as far as you want, and you'll notice that there's areas that are very important in these market structures, in this price action, that is respected more often than not. And what I mean by that is whenever we have a tough area of resistance, we want to flip that into support. We want to at least back test it to show that we are now entering into, we're going higher, and we're not having a discussion later on can we come down and back test this, since we never back tested. The higher we move on this price action, the more likely that we're going to come down and back test these areas here. So the fact that we came down here and we front ran it, it gives me a sense that they are trying to basically fake you guys out and make you think that we're going to go much higher without coming back and back testing this. And history and the odds are in our favor that this is going to get back tested before moving higher. Now, we could break below it. We can use a candle body just like I did for finding the support and resistance. So we have this area here. Now, why do I think that? Why do I think that this is a trick to get you to think that we're going to go higher and then we're not going to come back and back test it? Well, one of the tools that I use is HyBlock. You guys know I've been talking about this for months now. I really like the information you find in HyBlock. Now, we're going to look back a little bit long. This is a 12-hour time frame on HyBlock, aggregated look between the three major exchanges that do derivatives contracts. And this is going to tell you the price action within the past 12 hours. But I want to go a little bit further down. I want to go over to at least, since we're talking about higher time frames and we're talking about the weekly time frame on the chart, I'm going to go to the monthly time frame, because the monthly time frame on the aggregated look is going to give us a bigger picture of what's going on here. And I want to talk to you guys. I know I've talked to you guys extensively about this, but I want to just reiterate some of the things that we covered in the previous videos. And that's going to be this liquidity here at 30,400. Now there's liquidity here starting to form. When was this? Let me look. This is starting to form, just starting to get intense heat. Back on the, what is this? About 4 days ago, 3 days ago, we started experiencing a uptick in the brightness of this area here, this cluster here. As it gets brighter yellow, it gets the higher the orders are. If you look at the chart here to the left of the screen, you can see the intensity of the color and what they represent as far as dollar value. Now, when you look at, give me 1 second here, I want to just, there we go. Just how to put it in order. Okay, so now when you look at this cluster here and you look again at the relationship between the price action and the way these clusters develop. Remember what I showed you guys last week in the last video. This overhead cluster represents shorts. That's how these clusters are formed. These represent liquidation of those shorts. Notice something, guys. Notice when we moved up here and as we started to go down, what happens when price action goes down, guys, in Twitter? Everybody gets bearish, everybody flips negative, giving people a sense of confidence that they're smarter than everyone else and that they're going to short the market. And as those orders build up, as you can see here, look at the way the heat continues to build up. And I showed you guys this last week. I'm showing you again, guys, because I believe in repetition. Continuing to repeat the same things will get you guys in that frame of mind and understanding. When you look at these videos, you're not intimidated by them and you kind of understand what we're looking at as a whole. So as we're moving and as we're going down on price action, look what is going on. This is getting brighter and brighter. Now, in my opinion, the reason that we didn't go back into, let me go back to that, back to this chart. The reason we got front ran here is to give you, I mean, this is, what is this? This was the 8th of May 8th. We are at the 22nd. Let's look back at May 8th. That's this right here. That's this inside of here. So let's do this here. I'm gonna just concentrate on this right here. Just this cluster right there. Okay, this is May, oh no, it's May 12th, excuse me. May 10th, May 8th right here. Okay, look at May 8th. Look at May 8th. Look at where we're at. Look at how we fell. And look at, as we're going on here, from this point here, look up here, guys. Look at how these clusters continue to get brighter and brighter as we continue to come down. You notice that, guys? This, again, is showing you that everyone is thinking the exact same thing. We're going to be dropping. Now, why is this cluster so much higher than this cluster? Because people are starting to become a little bit more cautious and not leverage as much. So the higher the leverage they use to give themselves that buffer, the higher the liquidation clusters are going to be. And this is a good view on how when you think you're special and you think you're smarter than everyone else, you're not. Because this is formed by thousands and thousands of contracts. So everyone thinking the exact same thing you are goes to show that you are not smart in the market. Everyone is thinking the exact same thing because everyone's looking at the same exact charts, looking at the same time frames, looking at the same invalidations. And what I mean by that is, look at these, look at the top of these of this price action and look at where the clusters are. The cluster, and look at above here. Where is this cluster above? It's above all of this price action. Now, why is that important? Because what you guys are doing, you guys are putting in, let me go down in here. You guys are putting your stops and your liquidations right above here. So everyone thinks the same thing. Well, if we break above it, that means we're going higher. How many videos have you seen people say, well, as soon as we break this here and we confirm it, I'm going to take a long. And everyone thinks the same thing. So everyone puts their stops right in here. And those stops and those liquidation adds to that cluster of heat. Remember, that cluster is the point where the market makers are going to make the most amount of money if they can get the price action to go back into that area there. So think psychologically back again to this dip that we had here. What do you think this did psychologically to people when we got front ran and we didn't quite get in there? People started to think that, okay, this time it's different. Now, as you're building, as people are getting somewhat confident about that move, let me show you back here, the May 8th, right in here, right 8th. As people are starting to think, look what happened down here. People were getting excited that we may be going higher, and these people that started this cluster here, look at this. This started getting right here when we front ran this on May 8th. This is May 8th right here. Look at below, and look as the day goes by. The next day, what happens to the heat at the bottom? You see how it gets brighter and brighter and brighter? You see that? Look. And as soon as it got to the highest brightness, what did they do? They came out and they took it. They just came and liquidated everyone. This is a game, guys. This is a mental game. It's a game to make you think, one, that the market is going in one direction so they can pull the rug out from under you. Now, this cluster does add to the bull scenario that we may be going up. And I'm not saying that we're not going up. But here's the thing that you have to understand, guys. I do believe that we're going to be hitting those areas. But I also think that as we're consolidating here and we're unable to break through some of these resistance like the 9 EMA, we're unable to break the cross indicator on the momentum indicator on the MACD, that we're going to have a fake out, or not so much a fake out, a test of this area here. Now, why do I think 25,000... what is it, 25,300 is an area, or 24,275, we'll call it that, for using a round number. Because when you look at the liquidation, not the liquidation date, but you look at the spot heat map, this is a spot heat map, look at where they are taking where they're putting the clusters of buys. Look at these buys, and look at the way they're moving these around. You see these, again, going back to the same brightness of color. The brightest yellow is giving you, if you look at the blocks there, right below in the little box that pops up, it gives you the amount of Bitcoin that the orders represent in this box here. So on this box here, we went from 506 Bitcoin. Now, what they did here, they cut that order. They lessened it. They went down to 250. We went from 5, basically cut it in half. Then yesterday, they turned it on again right up here. What this does, this creates a magnet for price action. And I've been posting these charts for years now. And you see that when I post those heat on these maps, it doesn't happen right away, but it builds a pressure. It builds a pressure, and then before you know it, it's chasing either the liquidity clusters to the top or to the bottom. And look at the way they raise this up here. Look at in this area here. They raised it up here trying to get it to go to $26,000. They couldn't quite make it. They then turned it back. They then turned it on at 25,300. You notice that level, guys? It adds up right with our wicks resistance on the chart. Let me show you real quick here. Right here, look at that. 25,333 and 25,000 right here, and 25,000. Right here. Now, what they did is they raised it up a little bit higher. They raised it up to 25,500. This was just day before. This was just yesterday. They raised it up. They also put some down here at 25,400, and they removed it today. What did they do? Look, they still have this one at 25,000. So they're trying their best to get the heat to come right down into here. And they put a sell order block right here at 27,400. Now let's take a look at that heat, and let's look at, and that was locally. So we're going to go to the 12-hour time frame because they just finished putting that. So now we're going to look at this, and we're going to see why do they want it. Why are they putting a sell order? Why are they trying to block the price at 27,400? Well, let's look at these clusters up here. What is this cluster here? Look at that right there. 27,300. This cluster here, basically they're putting a cap. They want to put a ceiling so that if it goes up here, they have a massive sell order. So the whales are saying these liquidations are more likely going to happen when they come here to come and take this out. We're going to go ahead and take advantage and sell into what, guys? What do you do when you sell? Do you sell at the bottom? Do you sell into weakness, or do you sell into strength? Notice how these sell orders here above are positioned to sell into heat clusters of liquidations. They want to sell into that strength. The next strength that we have up on top is 29,500, and then look at this, guys, $30,000. Remember this is different than the other heat map. This is a spot heat map against derivatives. And the cluster that we saw, when we went back a month behind, was right at 30,000. So you've got the whales saying, well, when they go up there to liquidate those guys, because the whales know the game, we want to sell off. But there's also another issue to that, guys. You can't look at this and you can't look at this data and think, okay, we're 100% going to $30,000, because you have to think of the amount of money that it's going to take for the market makers to get that price up there. As of right now, I follow a lot of people on-chain, and they're showing a lot of people much smarter than me, and they're showing massive amounts of Bitcoin being moved into exchanges as the price continues to go up and the sell-off is continuing to happen. Why is that? Again, when do you want to sell? Do you want to sell when the price goes down, or do you want to sell into strength? That's exactly what's been going on. So if you look at the spot CVD and you look at the volume that's coming onto exchanges, the pressure is getting greater and greater as the market makers are trying to push it up. They're trying to get up into the liquidation data, but they're not able to. So there's going to be a point where the algos are going to either make sense to go up there, or the sell pressure is too high right now, and they're going to push the market back down. So those clusters, guys, never take those as gospel. They're not guaranteed to get filled. They're just a marker for you to keep in mind that that area there is a very good target for the derivatives market to really put some max pain into people and really cash out. But it doesn't always hit exactly the way we believe or we think it's going to happen, but it gives you a good, so if you're trying to make a case for the upside, you have some points on your side. You have some ticks that you can add to your column, to your bullish column against your bearish column, and then you can decide, the market's going to decide from there which way it's going to go. But at least you can make a story. You always want to make a case for both the upside and the downside. All right, so let's go back to the price action. Now let's go into local times. Now I'm going to go ahead and turn my EMAs back on, because I do want to see, I'm going to go to the 12 hours. It's not that much different from the daily, but it does give us a little bit of different perspective. So looking at the 12-hour time frame, you can see the 12-hour time frame, we're holding up against two key EMAs for me. This pink line here is a 200 simple moving average. This is the 200 exponential moving average, the EMA. So that's what these two here are representing. So you can see here where we've been coming down into that 200 and both 200s, and we're finding support. But we're getting a lot of overhead EMAs that are starting to really converge down into that. And what you don't want to see is these EMAs cross here. These EMAs crossing here is going to give you another signal, another notch on that column, on that bear column, that things are getting very toppy, very heavy, and the sell pressure is too high against the derivatives that want to go up to that $30,000 mark and grab that liquidity up there. Now, keep this in mind, guys. Going back to what I was saying about coming back here and tagging these areas here of support. Give me one second. Prior resistance into support. I believe, like everyone else, I mean, this is nothing new. One of these two are going to get tested, and then most people are expecting a bounce. And then on that bounce, because remember, the more we drop, the more people go into shorts. So the more people go into shorts, the more the heat above is going to get more and more prominent. So obviously everyone's expecting a hit here or a hit here and then a bounce into the $30,000 area. Everyone thinks that it's that simple. And it really isn't, guys. You have to, again, keep in mind that if the market makers, now that 30, now look at this here. I want to show you a date. Let me go back here just so you can have an idea. Let me go back a month and let's see when that got the brightest, when it started really getting its full brightness, and with the date, and I'll explain to you why why it's important. May 10th. So 12 days ago, it started getting really bright, right about May 10th, May 11th. Now let's go to the chart and let's look at May 10th, May 11th. That's right in here. So while we were here, we were not able to get up into that area here. And we had a 9-day sell-off. So think about that, guys. If we were unable to get into that $30,000, and back then, let me show you how much money they would have made. Right here on May 11th, if they would have came up into this cluster, they would have made they would have liquidated $18.8 billion. 18.8, almost 18.9. Now think about that. How much money they would have made on liquidating those contracts if just by pushing the price up $2,000. Look, just $2,000 right here. And percentage-wise, just to give you an idea, it would have been almost not even 4%. Not even 4%. Now, where are we? Let's look at this. Now, right now, we are now 15%. Okay, and we're going to come down here. Let's say we don't even go to the here. From here, now we need 22%. You see where I'm going with this, guys? If they were unable to push the price up 4% to liquidate almost $19 billion, and they're not able to push it up from here 15% now. Think about how much money is needed to push it up 15%. And they can push it up 15% from here. How much more likely it is that it's going to bounce from here and go straight up to that 30,000. It becomes harder and harder for the market to push into that area the more we fall, because it's going to take a lot more money. And again, does it make dollars and cents? Is it going to cost them, again, just for the sake of argument, is it going to cost them $50 billion to make $20 billion? Does that make sense? It wouldn't make sense to anybody else. So these guys don't lose. They're in the business of making money. So not that we're not going to get there. I just don't think it may not happen as soon as we hope for. Everyone is hoping for this exact same scenario, and everyone's lined up for the same exact thing. So you hear all these people saying that as soon as it goes here and they bounce, they're taking a position. This is where they open the longs. This is what they open the longs. Now think about that. If everyone's doing the exact same thing, so go back to this here. Everyone's doing the exact same thing. What happens when everyone does the exact same thing? What do? Do they pay you? Look, do they really pay you guys? They come in, they liquidate. So now going back to what everyone is thinking, what do you think is the most probable scenario? That we come down in here and everyone long, because every influencer is saying from here and here, this is where they're taking the long. Do you think that the market makers say, oh, they outsmarted us? Oh, yeah, of course. Yeah, we never saw it coming. Or do you think Max Payne would be coming down and continuing to liquidate everyone who tries to outsmart the market? That to me seems like a most likely scenario, most probable scenario. Now here's another thing that's really important that I want you guys to look at, the daily time frame. And I'm going to do this. I'm going to turn off all EMAs and I'm going to focus on one EMA, one very important EMA, which is the 200 EMA. Now, look at how important the 200 EMA was when we established our first higher low. Remember what I told you guys, that this could be a higher low, but I would have wanted something with a little bit more. Let me get this out of here. Let me get this out of here and this out of here. Okay. And let's go here and let's go use the fib. Okay. So here's our fib, 618-706-786. Now here, I'm going to use the same fib here to give you a context of what. There we go. What do? We came right into the reload area and we sprang and we put in a higher low. Now, if we can put another higher low in here, Somewhere in here. It doesn't have to be exactly on 618. It could be 706, it could be 786. But look at where this 200 EMA lines up. Low, high, higher low, higher high, higher low. Then we're talking. Now we're continuing and we're respecting that higher time frame market structure to get us into that level. But I believe that as everyone is waiting to long these two areas, it's going to be a scenario where they come in here, they fake everyone out, and they back test all of this support that everybody is looking at right inside of here. They come back here, and everyone going long. Yes, all the influencers were geniuses. This is everybody's. The guys are going to have their orders in here. The rest of crypto Twitter is going to enter here. Big traders will enter here. Crypto Twitter will enter right here, and then she goes down. Then they basically get liquidated or they capitulate, and then we'll have that bounce to the upside to put in our higher high. This to me seems like a more probable scenario. Now let's go into the smaller time frames. Let's go into the 4-hour time frames and look at some local areas that I'm looking at to see if we could. Let me go ahead and just turn all these EMAs back on and look for intra-week movements of what is going on. So we got the 4-hour time frame, and we're inside of a range right now. So actually, we can use. You know what? Let me go ahead and get rid of this. Get rid of this. I'm going to put a channel in here. We'll go on the right here. Look, we're inside of this range. We're right in here. Here, and we're going to grab this here. So we got candle bodies here. We got the wick support here, tweezer bottom here with a nice up thrust here, and a nice catch here at the bottom. A little deviation, no big deal. Sweep of this liquidity with this wick, and then we moved up. Classic sweep down before moving up. And I talk about that a lot on my videos as well. When you see this is a marker that we're going up. When you see this come here and then you see it wick up, you know what they did. They came and grabbed this liquidity, and then they move up. Very, very typical signature that they do. Look at here. Again, they came down here. They took all this liquidity that was in here. They faked people out. They made people jump into shorts at the very last minute, and then they moved it right back up. Quick. Look, they left that wick. Quick. Now, one day we're going to come back and we're going to grab that, and then this is going to be another marker that we're going to grab. But for right now, looking at the 4-hour time frame, you can see where we're rejecting off this middle. We went right above the medium line on this channel. We came back down. We tested this bottom of this channel again. Today we came here and we had a little move to the upside, and we're still underneath this middle line of the channel. So we're technically above the 9 EMA, but we're not quite looking very bullish. I would have liked to see a little bit better market structure, maybe a little W to get us back up into this area here, grab this liquidity, or even get to the top of here. What I would like to see happen is if we can have a move to the upside, and we've got all of this trap liquidity here, and we've got all of this trap liquidity in here. If we can come up here to the 200 EMA, look at what we did last time. We went right up to the 200, tweezer top, boom, big rejection. If now the 200 EMA is much lower at 27,000. So let's make a case for that. We have 27,640. So let me put a line here. So, okay, so that's our 200 EMA on the 4-hour time frame. Now let's look at our local liquidations. So we're going to go back to the 12-hour time frame. We'll go to the 12. Actually, we'll go to the 7-day. It gives us at least a week back to look at. Is there anything that we can find in that 27,633 that can give us a target? What is this here? Look at this heavy liquidation, 27,850. Okay, let's mark that on our chart. 27,850. 27,850. Okay. Now let's go ahead and change this. I'm going to change this to yellow, and this is 27,850. What do you know, guys? Look at this. There's a 200 MA. There's a 200 EMA right in between. And right above, slightly above that. So all they have to do is wick it up here, candle body close below the 200, and then down she goes. And it'll knock out all this liquidity here. You see how we can make a case for that, guys? And then look, if you look to the left on this yellow line, what does that represent? Actually, look, I'm going to hide the indicators. What does that yellow line represent? Not only does it represent the heat, but prior what? Prior resistance once again. You see how you can start formulating a thesis around an objective without having a bias, without thinking, okay, yeah, I'm a full bull, let's go to the moon, or no, let's go down and reset this bitch, let's go back to zero. No, you just look for different areas of confluence using different parameters. So if you're using a momentum indicator, you don't want to use another momentum indicator to measure, to give you a second area of confluence, because that's still a momentum indicator. So you want to use a momentum indicators, maybe an EMA, maybe some clusters on the liquidation to give you a reason to go up there. I mean, we all want it to go up, but why? Make a case. Why would it go up? Well, here's a very good case. It's called $5.1 billion. That's a strong case. 5.1, almost 5.2, you can say 195. So $5.2 billion worth of a target for the market makers to come up there and grab that. That makes one hell of a case to get up there. Now, 200 EMA and the 200 MA pose a very strong area of resistance, lines up with resistance in the previous price structure. So now you start making a very good case why you can take a long into this area here. You can open a starter position here. When it gets above the medium line, you can add to it. When it gets above the 50 EMA, you can add a little bit more. When it gets above the 100 EMA, add a little bit more. You know where your target is. You could either take 50% profit here, take all your profit here, and if it gets above the 200 EMA and back tests and it starts going up, you can add to that position. Or again, you want to be realistic. For me, if I was taking on this trade, which actually I am, this would be my target, right inside here. Right inside here is where I would take my profit. And then if it does prove it to me that it's going to get above here, then I'll re-enter in here. But I'd much rather take my profit here, know that my plan was complete, and then look for another plan. Because more than likely, think about it, if we push all the way up in here, what are we going to do? What's the most likely direction we're going to go? Remember this. All of this resistance, what is that going to turn into? Support. So very unlikely that we're going to break right through here, right above the 200, and come and back test this here when we never came back into this area here. So the most likely scenario, we come in here, you take the profit, back test. If it back tests and it bounces or it consolidates, turns it into support, then you have another trade, and that's how you formulate trade by trade. And again, it depends on what your trading plan is, how you want to formulate it. That's all up to you. But that's how I would do it. That's how I view it. And I'm in a long at the moment for that. Is it risky? Yeah, it's risky. I mean, we're putting in lower highs. You can see this lower high, lower high, lower high. But I understand what all of this means here. All this trap and all of this heat here adds to a story of why I'm willing to take that risk. And then, again, start looking for invalidations. We break below here. What's the most likely area we're going? We're going lower. We consolidate here. What's the most likely scenario? We're going to go higher. And then you can decide whether you want to take a long, break below here, confirm, and take that short. It's all taking it each step at a time, looking for reasons for validations and invalidations on where we're going to go. Let's go to the hourly time frame, see if there's anything different there that I'm looking at. Okay, on the hourly time frame, I think the biggest challenge right now at the hourly time frame is going to be what? Think about it real quick. You should be able to, and again, this is why I use EMAs. Look at the 300. Look at all the rejections out to the 300. And for those who don't use EMAs, this might help you to understand or get you to start considering using EMAs. It's a quick visual on where does resistance lie. Every time it hits that 300 EMA, look, sharp rejection. Sharp rejection. Look at this. All of these rejections right at that 300 EMA. So why would I think that this is any different? So this helps me to understand the hurdles that my position is going to have on the way up so that I'm not panicking. Because if we can clear this and I head here, I'm going to expect a move to the downside. But guess what? If I expect to move to the downside and it consolidates here or it bounces off of here, what can you do? You can add. It gives you that next layer of confidence that it's needed if you wanted to add to that position. This is a good area to add because your TA is working out. You got above the 200. You knew that this was going to be a very high probability this was going to bounce. And since this was prior resistance is right now, and you got above it and you hit another prior resistance, you're expecting this to hold if your thesis is correct. So if your thesis is correct and you have a candle body close above here, maybe one or two, and you start heading up on that move to the upside, what's the most likely? Again, it's about probabilities. Is it probable that if it keeps going up, it's going to go back down? No. The probability is that it survived this, came in back tested, it's going to continue to move up. So it gives me the confidence to add up. Now on the second move to the upside, when it breaks through here, again, what's the most probable scenario? When we finally break above here, if your thesis is correct that you're going here, and you finally break above the 300, is it going to go straight one line to here? No. Why? Because you look at this EMA and you look back here, you look at all of these touches. 1, 2, 3, 4, 5, 6 times. So when you finally break through here, you're going to look for that back test. And guess what? It survives the back test. It starts to move up. What do? You have that confidence. You want to add to that position again. You can add to it. See how little by little, as things become validated and your thesis becomes stronger and stronger on each one of these hurdles, it gives you that confidence that you can start off small here and you can add to that position here. And you can start scaling out as you get closer if you wanted to. You can do that as well. As you get closer to here, or maybe here, you take a 30 position, another 30 position here, and maybe leave some here just in case it continues to go. And that also is a very possibility. Though, if you look at HyBlock, normally when they get to that cluster, it doesn't usually pass that cluster much higher than that. It usually stays right at that cluster. If you've been following me for a few months now and watching my videos, you'll see how we just stop right at those clusters. But again, it could happen. It could go higher. But that to me is you have to have a hard target, and that to me would be a hard target. Other than that, guys, there's no point in going even lower than this. I just want to give you guys a overview, a macro view, and I wanted to give you guys more of a medium view, like a 12-hour, and then some lower time frame views to help you understand how you formulate that plan. I'm going to be opening my Discord. Right now, my Discord is just a paid Discord for education, and I'm going to be opening up a section in next week that's going to be a free section to give you an insight of what the Discord is about. And we're going to have a premium, which is the paid portion of it. Then we're going to have the free version of it where you can come in and join for free and see if it's something that speaks to you, if it's something that you can relate to. If you want to further your education and you want to understand what all of these signals are at, what all these, not signals, but better said, these tools, these EMAs, the channels, the support resistance, the Fibonacci's, the momentum indicators, how all that works individually and all together, how you can put it together to frame a trade setup. Maybe you might want to join the free portion of the Discord when it opens up next week, and then you can evaluate from there if you want to move forward with your education. But we're making at least that'll be your first step to get in to the Discord and then go from there. I'm going to be keeping my Telegram. My Telegram is going to be focused more on the heat maps. So that is going to be different than the Discord. The Discord is about education. Not that the Telegram isn't educational, but it's very limited to the movement of the derivatives market and the spot market as far as liquidation data. So, and there's people that I've posted those before. People are making money just on following where the money flows. If you have no interest in learning how to trade and you just want, where is that money going? Where is the most likely, most probable scenario of where the liquidation is going to, where the heat is located? And that's where I'm going to put long it or short it into those areas there. That's what the Telegram is about. It's not too much heavily weighted towards education, where the Discord is to help you become a trader. It's not going to happen right away. And the unfortunate reality is that most people that come into a full-blown bull market all of a sudden think they're traders. And then when the market leaves them behind holding the bag and they realize that they were not traders because they didn't understand the technicals behind why things were going up and where things top out, and they end up holding that bag, that's usually when they become a little bit more interested so it doesn't happen to them again. So hopefully you guys are taking time during the slower part of the cycle, during the bear cycle, the recovery cycle, however you want to frame it. I frame this year, like I've said many times before, I don't frame this as a bear market. Technically, yes, but I frame this as a recovery market. Just like 2018 was a bear market, 2019 was a recovery market, 2020 was the bull market. Using that same type of theory, 2022 was the bear market. 2023, which we are now, is a recovery market. 2024 is the bull market. So during this time, are you taking the time to educate yourself to maximize that bull run, and more so you're not left holding the bag? Because when euphoria kicks in, dopamine kicks in, and you think you're a genius, it becomes, one of my good friends, Chi-Town, calls it a genius season. When you hit that genius season, believe me, guys, you will not, if you're not well educated and you don't have a good grip on how technicals work, you will be left holding the bag. And I'm sure many people who are listening to this now were the bag holders of 2022. 2021, 2020 and 2021, you bought during that time. And most of you either are still holding or you sold very recently and you sold at a loss. Now you want to find out why. Why did it? Why, I can't understand. Why was everybody calling for $100,000 when we at 69? Why were they calling for a recovery when we're at 40? You guys, if you guys go back to my feed, November 2021, I was even on a YouTube with Crypto Wendy O and a couple other people, and I said we're going to be going down into 886 down, and that was 886 is 11,377. We ended up going to 15,000, so I was $4,000 off my target. But that was in November of 2021, where people were still calling for, nope, we're going to $100,000. We hadn't even begun. We barely begun the downtrend. And during that time, from 69,000, I mean, all the way down to as recent as last summer, when we had this move here. When we had this move here, how many of your favorite influencers were telling you right here that this is it, it's over? And they were all telling you, nope, this is it. This is the end of the bear. This is the bottom. This is the bottom. They were soaring up and down how this was the bottom. They're all geniuses that they're loading up here, right? I'm sure many of you guys remember that. And if you don't remember that, all you have to do is go back on Twitter, scroll up between the last week of June, and actually the best time is scroll to July, the middle of July, and then scroll all the way to the middle of July to the first week of August, and read all the if they haven't taken it down, read all the tweets around here and see what people were saying. Right up in here, everybody was a genius. Everybody thought we were going up. And nope, we still had a lot more pain to go. Get ready, guys, because you're gonna have an opportunity of a lifetime, and I think it's gonna be a really, really good opportunity to make a lot of money. And I really do believe, in my opinion, we're gonna hit $250,000 or $500,000. Even the technicals back up those numbers. Not just me pulling a number out of a hat, but I do believe that the technicals do warrant that we're gonna be going into 250,000. And then when you factor in the FOMO, it can easily push us up to $500,000. 2 Bitcoin could get you $1 million. Imagine that, even if you buy it right now, turning $52,000 into $500,000, into $1 million. That's a hell of an ROI. But the problem is that most people don't have the discipline to hold it. You will think you're a genius and you will blow it, or you will hold it all the way up and hold it 3/4 of the way down. All right, guys. Hope this helped you guys. Have a good day.